Welcome to this video. In this video, I'm going to be making a stock analysis of Medpace Holding. If you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice, this is purely for entertainment and educational purposes. Now, as you can see, for the day, Medpace has increased insanely much. And why is that? That is because they beat their earnings by quite a lot. They beat them by 70 million, which is absolutely crazy. Now, overall, Medpace usually does absolutely amazing. Now, as you can see, the current graph where each candle is an hour, it's not that good looking, but let's just make each candle a day. And as you can see, it has been performing absolutely crazy ever since it joined the stock market, basically. Now, what does Medpace Holdings actually do? Let me just make these candles normal again. Well, they do clinical trials for other companies. So let's go down to the financials. As you can see here, it looks like they are in every single type of medicine. They technically are and aren't. So they both have oncology, metabolic, cardiology, and so on and so forth. So say you run a medical company and you want to get something out onto the market, but you don't have the resources to generate the product in-house and to get it to the FDA and so on and so forth. You hire Medpace. They do all the clinical trials for you and everything that is needed to get your product to the market, and they work with big companies and startups as well. So they do all that kind of stuff. So, and they've just been performing absolutely crazy. And as you can see currently, look at this huge gap here. We have it jumped over $100, $170 the day that their earnings came out, so which is absolutely crazy. As you can see currently, we're trading up all the way up here in 93 in the RSI. Now, if you don't know what RSI is, that is the relative strength index. So if something is above 70, as you can see here, it's overbought, which means something is moving upwards rapidly. If it's between 70 and 50, it's in the upper channel, meaning it's trading upwards. And if it's between 50 and 30, it's moving in the lower channel, which means the stock is falling. And down here, it's oversold. Now, you always have to be careful when something is up here or down here, because this means that it is much more volatile when it lays up here. This doesn't mean that the stock isn't going to increase more. It could easily close in 530 if that would be the case. But when something is up here, or up here, I should say, in the RSI, it is typically much more volatile. Now, as you can see down here, the beta in this is quite low, which means it moves usually less than the index it lies in, which means it is quite a steady stock, but currently it is rocketed. So of course, today that doesn't count. Now, the price to earnings on this is quite high with almost 23, but then again, it is a Medicare company, so that makes quite a lot of sense. And as you can see, their basic EPS is 13.81, which is absolutely amazing. Now, as you can see here, recently they beat their earnings by 8%, by 24.87, by almost 20%, and by 4%. So generally they do perform amazing. And as you can see here, the estimated revenue was 538 million, but the reported was 603 million, which is absolutely amazing. This also shows that a lot more companies have drugs in trials, so chances are it's going to be performing even better in the future as well. Now, they don't pay out in dividends, sadly, but as you can see here, they make more and more money and they increase their margins more and more. And it wouldn't surprise me if they pay out dividends in the future. Why is that? Well, that's because they don't really risk any money because they're just developing drugs for other companies, which means they don't have to put in a billion or 2 billion or 3 billion bucks into a product because they're simply developing it and doing clinical trials for other companies. This could be Johnson and Johnson, Novo Nordisk, so on and so forth, huge ones and small ones alike. So chances are, with a steady cash flow like that, it wouldn't surprise me if they pay out dividends in the future. Now, the performance of this stock, as you can see, let's just do every single year. As you can see, it has been absolutely amazing. I mean, the worst year is minus 0.89%, which is basically nothing. And as you can see, all the other years, you have basically had a two-digit gain, which is absolutely crazy. And this year alone, as you can just see, look at that, we're performing poorly this year at minus 10%. Currently, we are sitting at, what is that, plus 43%. So absolutely insane. And I really like this company just because of how safe it is and just the way they operate. So I really like this company, and now I don't own any of them myself, but I do like the company a lot. I thought they were too expensive before, and now I might actually have to reiterate because if they can jump this much on a single earnings, maybe they're actually cheaper than they should be. And now I'm going to preface that by saying, look at the analyst rating here. They are, of course, everybody thinks they should be sold now, and that is because if you look at where they were before, it was quite much on par here. But of course, with this huge increase in the day, analysts hasn't really had a chance to reiterate their analyses given how much they made. So I think we're going to see some reiteration of this very soon. But of course, every analyst has to read every single nook and cranny of that report. But overall, it is 2 strong buy, 11 hold, and 1 sell. So overall, it's quite nice ratings. But of course, we have to see the reiterations after this huge increase. If it increases more, it's gonna, or if it falls more, we are gonna see that. And as you can see on the annual earnings, they're just estimating that the EPS is gonna increase even more. And as you can see down here, the revenue is just going to increase more and more and more. And I like this company quite a lot, and I am still highly considering buying some of their stocks. Now, I am personally going to wait until to see a bit more of a flattening out here. As you can see, once it flattens out here or rises slowly, I want to see it either do a slow like this or even just fall a bit or rise a bit. I don't like to see this huge choppy and these huge gaps because it's just very difficult to analyze. As you can see for the day, it's a strong buy that should surprise you, and for the month, it is still a strong buy. Now, of course, that I have to say the technicals here don't perform that well because they can't really take these gaps into consideration. So gaps is technical analysis' worst enemy. So be a bit careful on the technicals these days because the technicals need to catch up a bit. But overall, it is performing very, very nicely. Thanks for watching this video. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see any other videos like this, please leave the comment page for me to analyze in the comment section below.